Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Morning everybody, let's take a look again on the euro currency. So currently guys, overall price performance looks very heavy, and although theoretical in bullish context has not been failed totally, as market actually keep valid this bullish grabber, but intraday performance makes me think that we should be ready for a downward breakout. So there are a few reasons for that. So everybody heard about the recent Fed minute protocol, where it was really hawkish, and it was suggested that Fed could even start acting earlier than it was suggested initially. As you can see, massive collapse on other markets. On the currencies, for instance, on the New Zealand dollar, there's really very big move right here. With the hand and shoulders probably will fail that we discussed recently. It's bearish sign. In general, on the weekly chart, we could get the bearish reversal candle, which is just taking out of these lows, and actually everything goes well with our long-term scenario on the New Zealand dollar, where we're waiting for actually level around 65. So stocks market also has collapsed. So you take a look at the DAX index, for instance. It was reaction on the Fed minutes on the S&P, some drop. But this is only the half of the story, guys. So the euro currency as well. Dynamic of the interest rates now gives no doubts that it will proceed higher. The nearest target will be around 180. This will be 127 extensions butterfly. So initially we thought that might be card is cheaper to sell, but later, as you can see, this acceleration, it turns to the butterfly. It suggests further action to the upside, which support the value of the United States dollar. That makes really very tricky any attempt to go long on the euro currency as well. And we think that the nearest time we could get a bit stronger drop here. But this is only half of the story, as I said. Another problem is geopolitical tensions that now stands in Kazakhstan. So you probably heard about this. It might be a really minor thing, because Kazakhstan is a minor country. It doesn't have really big influence and domination on the geopolitical world. But the problem is it's currently it touches the interests of the Russia, and the problems that stands right now there, and that leads to a bit hot geopolitical situation. Now it's military conflict inside this country, although it was really very quiet country in recent times. So also, as you know, the Baikonur spaceport stands in Kazakhstan, which is very important object. So that's why this conflict could get significant continuation in the geopolitical sphere, and this also supports the United States dollar. So that's why in the current situation I wouldn't consider taking the long position on the euro currency anymore. And besides, overall price performance here shows really weakness, and that euro is not able to proceed higher. So currently it seems that this pullback is just a retracement after the reversal candle here, and it suggests further downward action. So really big chances that this grabber will fail. On the 4-time frame chart, recall what we had said about the hand and shoulders. Yesterday we talked about the response here on the market, on the conference. So here's probably will be pullback. You could try to take the position with daily grabber. At least market will jump to the 1340, 1345 area, where the top of the hand shoulder stands. So of course it's difficult to identify the hand shoulders as choppy action, but some shape of the pattern we could recognize. That makes me think that, really big chances stand that market will take it out of these lows, and we could get something of that sort. So it might be some ABCD downside continuation to the 112.30 target. But if this will happen, it will just mean that market is coming to the previous lows, and the breakout of these lows will be just a question of time. So it means that currently chances that euro stands in a major downside reversal and downside continuation that we talked about on the higher time frames, on the weekly and monthly, currently the chances for that really significant. So that's why we're not considering currently taking any new long positions. So that's our view.